for entertainment purposes. I guess it's kind of funny, but let's just watch the beginning and observe how there's nothing being said in the very beginning for like several minutes.
Okay, let's do it.
You are about to learn one of the biggest secrets in the history of the world.
Whoa!
It's a secret that has huge effects for everyone who lives on this planet. Most people can feel deep down that something isn't quite right with the world economy, but few know what it is. Gone are the days where a family can survive on just one paycheck. Every day it seems things are more and more out of control, yet only 1 in a million understand why. You are about to discover the system that is ultimately responsible for most of the inequality in our world today. The powers that be do not want you to know about this, as this system is what has kept them at the top of the financial food chain for the last 100 years. Learning this will change your life because it'll change the choices that you make.
Let's see if it
If
does
enough
that.
people learn it, it'll change the world because it'll change the system. For this is the biggest hidden secret of money. Never in human history have so many been plundered by so few, and it's all accomplished through this, the biggest scam in the history of mankind.
I just got to give a quick comment on that. We've looked at the history of money all the way back to ancient Sumeria, and I got to say, as bad as the situation may be right now, I don't know if I would want to live under the financial conditions of ancient Sumeria. Would you say that's an accurate?
Yeah, I mean, you'd be a peasant who's forced to go bankrupt every couple of years because there's no rain or because seasonality wasn't conducive.
And bankruptcy means being sold into slavery.
Yeah, or quartered, I guess.
Yeah.
Worst case. Also, I want to point out that so this guy claims that watching this video will change the system. So let's watch this video and find where or how he thinks that people watching this video are going to change the system, because I couldn't detect that aspect of this video. But okay,
Let's go. In 7 easy steps. I like that.
I didn't even.
They say that money doesn't grow.
You missed that on the first time through.
Yeah.
Okay, here's the money tree.
On trees. But the truth is that the modern banking system creates currency far faster than trees can grow. Most people don't have a clue how currency is created. Economists and bankers make it sound so complex that people think they can't understand it. But I'm going to strip our monetary system down to its essence so that you can see the scam behind the curtain.
I wanted to stop there and agree with him on that point, that there is this whole, I guess, academic world designed to obfuscate how stuff actually works. So I would agree with him on that.
And he's part of that, ironically. So
Yes.
There's that.
And just how it affects you. Every modern society creates currency in pretty much the same way. But since the US dollar is the majority of the world's currency, I'm going to use the United States as our example. It all starts when some politician says, "Vote for me and I'll make sure the government provides you more free stuff than my opponent will." But there's no such thing as a free lunch. So to provide that supposedly free stuff, the politicians vote for the country to spend more than its income. This is called deficit spending. To pay for that deficit spending, the Treasury borrows currency by issuing a bond. So what's a bond? If you
First error.
Yeah.
This is entirely not how it works at all.
Right. The government doesn't borrow money and then spend it. They spend it first, and the amount they spend over the amount they remove via taxation is the deficit. And then after the fact, they sell bonds to allow people who accumulated those net private savings to earn interest on their money, which is a choice by the government. As we've pointed out many times, they wouldn't have to do that. They do it because I guess, there's a lot of banking lobby. There's a lot of rich people who want to earn income on their money at zero risk. So I guess that could be cited as a justification or whatever. But
And then,
he has a process backwards already, right then and there. Yeah.
right. And then
Because
just to
it doesn't
prove
explain
our point,
where does the money actually come from, right? So his cycle begins with the government borrowing money that is there somehow, But where does it come from? It starts with a deficit spending government creating money out of nowhere and declaring a tax so that people need that money and then spending it into existence, taxing some of it out of existence.
Yeah, and then I mean, it's what he's saying. Nima pointed this out, but I want to kind of put it in like a logical order. Is it's not what this guy's saying, Mike Maloney. It's actually not logically possible because Nima just pointed this out. If the government is going to borrow these U.S. dollars, where did those U.S. dollars come from to begin with? In order to borrow the dollars, they had to be created in the first place, and because there's only one place that those dollars can get created, which is the U.S. government, the spending actually has to happen before the taxation can happen.
And before the bond sales can happen.
Right, because if the spending didn't happen, there'd be no money to buy the bonds with, right?
Mm-hmm. Mm-hmm.
So, yeah, that's right off the bat.
This has recent, once again, practical implications that are helpful to understand. When the government runs into the debt ceiling, they are still able to spend money magically, right? How is that? Well, because all that happens is that their bond sales operations stop, but they can still spend money into existence. They can still pass their bills. All that happens is that that money does not get sucked back out of the system and put into bonds where it pays interest, which causes some other problems in the banking sector that we don't have to go into right now. There's
liquidity issues. I mean, there is some complexities here, but
yeah, there's issues with the bank's supplemental leverage ratio, where the their reserves are counted as a risky investment, and that creates some problems. And when those reserves get sucked out of the system, when people buy newly issued bonds, that helps banks actually free up their balance sheet and make more loans, and also buy some more stocks in their stock portfolio, where they buy on their own account, and their bond portfolio certainly.
So you heard it from Nima. When the reserves go down, the loans can go up.
Mm-hmm. Which is contrary to
bond is really nothing but a
thesis.
Say it again.
Which is, by the way, contrary to the fractional reserve thesis.
Exactly. That's why I pointed that out. Yes.
Mm-hmm. Glorified IOU. It's a pretty piece of paper with numbers printed on it that says, "Loan me $1 trillion today, and I promise over a 10-year period I'm going to."
Why is it what?
Why is it a glorified IOU? Why isn't it just an IOU? Like, where's the glorification come from? Doesn't matter. That's really a thought that came into my mind.
Well, I think it's a perfect example of the intro. There's a lot of emotionally loaded language here.
Yeah.
That isn't. Sure. That if we look at it and go, what does that mean? There's nothing behind nothing there.
Right.
I'm going to pay you back that $1 trillion plus interest. But what you need to understand is that Treasury bonds are our national debt. These glorified IOUs are to be paid back by you and I and our descendants through future taxation.
But they're not.
No, yeah. So the government frequently rolls over several hundreds of trillions of dollars of bonds every year, actually, because people always say, oh my god, how are we all going to pay back this $35 trillion debt, or what we have, or whatever? Well, guess what we actually just did, and we did
last quarter or whatever.
And we did the year prior. I think there was recently a year, it may have been 2020, 2021, wherever, where the government repaid something like $170 trillion in debt. Because obviously,
in quotes debt. I want to emphasize that because it's not the same debt as you or I paying on like if we issued a corporate, and I read a TV corporate bond, it's not the same thing.
Right. Yeah. Like we said earlier, the federal government spends money into existence, taxes some out of the existence. The reserves that are left over in the private sector. The federal government offers bonds against those reserves, and if people want to, they can buy the bonds that pay them interest. And so it's a choice that the federal government makes to offer these bonds. It's not that they need your money or anything like that. It's not a debt in that sense.
I'm going to keep going.
Therefore, when the government issues a bond, It steals prosperity out of the future so that it can spend it today. The Treasury then holds a bond auction, and the world's largest banks show up and compete to buy part of our national debt and make a profit on it by earning interest. You'll notice that as we move through this process.
Right. I just bought a bunch of bonds.
Yeah,
He
so this
was
is
helping me set up a permanent portfolio, and he's like, "Yeah, part of it is buy some bonds. I just bought a bunch of bonds."
yeah. So this is the private sector. There, the people with the paddle there. This is all of us. These are available to all of us. They're not just available to some cabal or some secret elite. This is available to every one of us to buy every week, pretty much on the open market, or every quarter in the case of 30-year treasuries or whatever. And by the way, they're saying they're stealing money. Actually, they're giving the private sector an interest-bearing asset that pays
With no risk.
It pays us even more money at no risk. So technically, it's actually the opposite. They're giving the private sector an asset that generates more income for the private sector out of nothing. So not necessarily stealing. And also, when I'm buying these bonds, nobody showed up and put a gun to my head and forced me to buy them, right? So it's not really theft in that sense.
Well, and then I think that this is important to point out right at the beginning is it's a lot easier when you stop thinking about it in terms of bonds and money is to realize that both the reserves and the bonds are money. They're both created out of nothing by the federal government. They're just a security instrument. And the easiest analogy is to think of it is that reserves are like money in your checking account, and bonds are like money in your savings account. Mm-hmm. Your savings account money, you're not supposed to be able to move it very easily, but it pays you a higher interest rate. The checking account money, it can be moved easily, but it doesn't pay you as much of an interest rate. In terms of how the federal government handles its own balance sheet, all they're doing is, okay, the reserves are in this column or row, and the bonds are in this column or row, and they're just switching numbers back and forth. That's it.
Yeah.
They're both money. Yeah.
Yeah, money is kind of like a zero interest perpetual bond. You could also look at it that way.
That's a great way to put it.
The big banks are there, taking a cut every step of the way. This isn't by chance, as you'll see shortly. Then, through a shell game called open market operations, the banks get to sell some of those bonds to the Federal Reserve at a profit. To pay for the bonds, the Federal Reserve opens up its big old checkbook and writes bad, bogus, counterfeit checks that should bounce because they're drawn on an account that always has a zero balance. There isn't one penny in there.
Right, because the Federal Reserve is the institution that is charged with creating the money out of nothing. That's what they do.
Yeah.
Right. Although I do want to give him some credit here is that he's making an allusion to the point that there's kind of this convoluted system to get this done.
Yeah.
I completely agree that the system is way too convoluted. There's too many steps in it, and I mean, the bonds don't even need to be there if we want to get down to the real situation.
Yeah,
you don't even need bonds.
He's assigning too much significance to this event that he's describing there. Is what I would say. It's not everything's wrong that he's saying, but he's overly dramatic about the fact that the Federal Reserve buys bonds back that the Treasury just sold to the public sector. So this kind of shows you that the whole thing is a wash. It doesn't need to happen because the Federal Reserve,
all these steps in the middle, you mean?
Right. I mean, none of this needs. The bonds aren't even. If the Fed takes the bonds out of the private sector, then they don't exist for all practical purposes. And then people say, oh, but the Fed earns the interest on the bonds and they make profits. Well, they send 98% of their profits back to the Treasury. So it's really...
Which you can find out by looking at the publicly available profit and losses that are on the Federal Reserve website.
It's really a pointless operation that maybe you could say it's a relic of an archaic system where there used to be a gold standard, where the different countries tried to incentivize people to not turn in their gold, so that not turn in their paper for gold, so that the country treasury would have a lot of gold in it. And so for that purpose, countries used to issue bonds that pay interest in order to discourage you from taking your money and demanding actual gold and hard gold from the government or from the banks, which acted on behalf of the government.
And I think that the point that you made about he's being overly dramatic about something that's technically true, yes, the Federal Reserve writes a check from an account that has $0 in it. But this isn't that big of a deal because it's like a scoreboard at a ball game. Like, okay, a team scored a point plus 3 points. Oh, where did you get those points from? You don't, you don't have any points back there.
I mean,
the reserve is just keeping track of
or Monopoly.
points.
Or think of Monopoly, the bank in Monopoly. Where did they get that money? Well, they didn't get it from. They have it. It's their job to keep score, to be a scorekeeper. There is actually some legitimacy to the concern. I would say that, but this goes back to a political science matter, which is the fact that we have all these independent agencies in the government that metastasize and create their own fiefdoms, their own bureaucracies, beholden to nobody elected. Federal Reserve is an example of that, right? So there's room for corruption within the Fed, and who knows what goes on under the hood. But this operation that he's describing is not one of the things I'm concerned about. But what I'm concerned about is generally the concept of having an agency that is answerable, that has all the privileges and the monopoly position, support of the federal government, but none of the responsibilities of being answerable to the elected officials. They're supposed to.
Which is, to reemphasize what you said, is not unique to the Federal Reserve in the slightest bit.
Right. The Federal Reserve, right, it's one symptom of that. And also, if we recall the documentary Masters of the Yen, which I believe was narrated it was based on a book by Professor Richard Werner.
Richard Werner for non-German speakers.
Yeah. And he discusses how the Japanese central bank used to be under control of the treasury. And that is how things are supposed to be let's say we're statist, okay? So we accept there's a statist economy, there's a government taxes and spends and all that. The way things are normally supposed to work is the Federal Reserve is supposed to be under the treasury. That's totally fine and totally normal. They're not supposed to be this independent agency that we all have to guess and fret over. Oh my God, what are they going to do next? Where are the interest rates going to be this quarter and that quarter? Not supposed to be that way. It's not totally unnecessary. It's all to create volatility, I guess, in my opinion, for certain people and certain groups of people to maybe partially insider trade and make a bunch of money.
Well, and then to that point, this is another thing that he's in a sense getting accurate, but he's getting all the details wrong, which is to say, okay, there's this, group of elites that are extracting, basically the productive capacity of everybody. I don't necessarily disagree with that.
Yeah.
But it's not happening the way that he's describing it.
Yeah.
Because with all this rigmarole and goofiness of selling the bonds to these guys, turn around and reselling it to the Federal Reserve, and the Federal Reserve's constantly changing the interest rates, and people are freaking out on, are they going to change it or not? There's so much room in there for someone a big player who actually knows what's going on, to be like, I can make so much money off of this volatility. Boom, 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 boom. Right?
For sure.
And it's all nonsense. The whole thing, like I mentioned earlier, we don't even need bonds.
Yeah, just so people understand where we're coming from. We don't need bonds, and we don't need the Federal Reserve to subsidize people with money by offering risk-free interest to them. The risk-free interest rate would naturally fall to zero if the Federal Reserve were to not intervene. If we had a free market in the interbanking system, to the extent that there's a free market possible, of course, it's all government run, but if we just had a free market for reserves within the banking system, there would always be excess reserves, and the risk-free interest rate would always be 0%. The reason why it's not is because the Federal Reserve decides to sell bonds into the banking system, which brings down the price of treasury bills, which creates an interest rate to begin with. So this quarterly interest or whatever monthly interest rate that they occasionally decide on, that's what that is. That is them telling us, here's at what price we're going to sell treasury bills and or pay interest on reserves. And that is completely arbitrary and unnecessary. Yeah. They think they're fighting inflation when they raise the interest rate, and they think they're stimulating the economy when they drop the rates. There's no evidence for any such mechanism. There's no such causation that's ever been established. There's not even such a correlation observable in the empirical data.
If everybody who's watching this now or recording could like, share, and subscribe it helps us out a lot.
Yeah.
I hate saying it, but it's just true.